Hello, traders. Welcome. Good morning to everyone. Good morning, YouTube. Good morning, traders. I hope everyone is doing well on this Tuesday morning. And today, we mainly have Jerome Powell actually talking on the wire right now. We'll see what he says, right? We'll see how the market reacts on that. And that's going to be the main topic of what I'm going to be talking about today, right? We're going to see. Um, how the Federal Reserve wants to assess into 2023, right? He's set to participate today in the International Symposium on Central Bank Independence hosted by the Sveriges Riksbank in Stockholm, Sweden. So while the event is going to started 2 minutes ago, it may not include any updates to state the U.S. monetary policy. So markets might be hanging on to every word that comes out of Jerome Powell to see if there's going to be some kind of statement that comes out of this symposium, this conference, to kind of give us some kind of indication of what the Fed might be thinking or doing in the coming year. Now, Jerome Powell's speech follows a pretty solid jobs report out of the U.S. economy that waged a really strong uptrend into Friday and even yesterday before we got a strong fader. Wage growth is rising, but cooled enough to bring down inflationary pressures while employers are still hiring at a pace of 223,000 jobs in December, but are slowing down from last year's unsustainable figures naturally. So unemployment also came down 3.5% compared to 3.7% expected, making its lowest mark in decades. So many hope that the data shows that a softer landing is possible. Also, one of the Fed members, I believe it was either this morning or yesterday, even talked about how the potential recession in the eurozone in the EU is minimal and not expected. So we're starting to really flip the tune here. So it's going to be very interesting to see how these next few weeks and months shape up, especially with this CPI data coming out on Thursday, and it's forecast to show a 6-month figure of falling inflation. So it's pace on its sixth straight month of falling inflation. So we'll see. That is a pretty decent um, average to kind of give us a idea of the capitulating inflation. I should say. So according to FOMC FedWatch tools, right, that we look at very frequently, the CME's FedWatch tool traders are now expecting about a 77% chance of a 25 basis point hike coming into February 1st and continuing to slow its pace of increases. So we'll see how that shapes up. Obviously, there's still more time. If CPI says otherwise, we might kick it into high gear and have a higher probability of higher hikes to come. So earnings season is also about to kick off this week, which the results and guidance will really help us understand the larger picture in the U.S. economy based on the prior quarter and what may be to come, especially since a lot of the financial guidance was eliminated from a lot of earnings reports over the last year. So we'll see how that kind of shapes up, and it could give us a lot of insight on where we might sit in this. Now, a special thanks to everyone that's here naturally that is on our channel watching these morning updates, and I love doing these. I want to give you guys some more levels too. We had a pretty strong pop here in the overall market off of some of this Jerome Powell talk he's been on about 5 minutes, and some of the remarks here to read. We have effective funds rate 4.33% January 9th versus 4.33% January 6th. That's not necessarily out of Powell, but without congressional law inappropriate for us to use our monetary or supervisory tools to promote a greener economy. So the Fed has narrow responsibilities regarding climate related financial tasks. The Fed must resist temptation to broaden its scope to address other important social issues. He's still like talking. I guess he's realistically not going to discuss the state of the U.S. economy and prognosis for the monetary policy, which kind of shaping up a decent little bull run here because it's alleviating some of the risk per se, some of the anticipated movement that we're going to get a disruption um, in the current trend. So that's kind of what I'm looking at right now. There's a few key levels that I do want to discuss with you guys before I kind of hop off a little shorter update here. But I don't think the Powell speech is going to be a huge impact on this market. It's good to watch just in case something comes out, but it's been mentioned multiple times that the expectations are not for a comment on the US monetary policy and economy. So we'll see how that shapes up. But right now, we have two key levels that I'm going to be watching 38.96 to 98. That's going to be a massive, massive area. It is a start of a new distribution block to the downside. So it held slightly here pre market. I tried a few shorts off of that. It worked okay, right? Worked for about like 6, 7 points, which is fine. Right now, we are above that level and we ran right up into that 39.10. That 39.10 is going to be a very important level for us as a flip area, right? A lot of bulls, if we can rebid that area, are going to try to take us to 39.17s. Right now, I want to see a 39.10s fail so we can go and test that 38.96, 98 region and see what kind of happens there. But if we get an acceptance above the 39.10, I think it's kind of clear skies ahead for another bull day as we anticipated. Yesterday, we did see a massive drop off that I was talking about with our room and on Twitter from also highs and other levels. If those who didn't pick up the highs were in the market. So right now, I could see an attempted bullish run in the morning. We'll see how that shapes up, but it's going to have to be above 39.10 overall in the futures market and see where that goes. Right, the bears win under 39.90, 38.96, 38.98 if those accept below that. So we're at a limbo pace right now in between two key regions. We're going to see how those necessarily shape up. So that's what I'm going to be watching for today here pre-market. Had a few trades here pre-market, nothing crazy, nothing special. And right now, I don't necessarily want to attack this just yet. I'm going to probably wait for the market. Nothing really good comes of 9 to like 9:30 while this market continuously trades here. So we'll see. There's a lot of anticipated news coming out of Powell, which can steer things up a little. So that's something that a lot of people are watching. But it seems that we're getting relief rally movement based on the exclusion of monetary policy talks in the US. So with that being said, I think tomorrow is going to be a very slow day overall leading into the CPI data here pre-market on Thursday, which I think is going to be the main aspect of that everyone is going to keep their eyes on. So I hope to see you guys there. We'll chat soon and see you tomorrow. I don't know where this YouTube thing is. Thanks, Logan. Appreciate that. And let's get ready. I'll be doing updates from Tenerife, Spain, starting next week.